Hey, good evening, folks. Welcome to another money space with me, Kalu Aja. Of course, on this space, we're talking money, the economy, and finance, personal finance, that is. And we're trying to make it personal to you. So I'm in a bit of a transit situation. So I said, hey, let's just start early. We're going to do about 2 hours. If we had started by 7, it would have been for an hour. So let's just get in quickly. This basically, like I said, is a space for you folks. If you have those questions about investing or you want to understand a concept, maybe bonds, equities, or if you have a question really about planning and all that, this is a great time for you to ask, and we'll try our best to sort of answer. I've got Olumide here as well. So you've got great content here. Just to put it out there real quick, just to request or DM anyone who works. Just to also emphasize, it's all educational. So nothing we say here is going to be investment advice or should be construed as investment advice. No offers or being made to buy or sell. It's all educational, just to explain stuff to you guys. So I need to put that context out there, right? So shoot, the floor is yours. If you have a question, do request. Before you guys do that, I just read out a few highlights for the week. I saw inflation, food inflation, headline inflation come down in Nigeria. Let me put it this way: the rate of growth slowed down in Nigeria, right? So that's promising. We need to see it happen as a trend line to really celebrate it. But I thought that was no newsworthy that the rate of growth for inflation, both for food and for the headline, had slowed down a bit. So that's fantastic. If we can keep that pace up, I'm not sure if it has to do with the guidelines on importation of food. I did see it, and I think it's a different policy that they are chasing. I think what I saw in that guidelines for food has more to do with you are trying to do this the midterm of what the policy is. They are trying to say let's boost local manufacturing, local milling of food product. That's what that policy is. You are bringing in husk grains. You are bringing in semi processed food to be processed in Nigeria. That's not really the policy that is needed right now. There's an immediate need for food to come in to reduce food prices. That can happen. Same with this other pot that they are chasing to say we're going um, to bring in semi-processed foods we process in Nigeria to increase value creation in Nigeria. That's a separate policy. But I think they are missing the immediate need of Nigerians right now, which is food at the tables right now at a cheap price. Because once you do that, you're able to achieve prices falling. And once prices fall, inflation falls. And then, of course, you then get that, should we say, um, reduction in overheating of the economy. You get inflation coming down. It even helps the naira. Prices fall, and you get a salary increase for everyone. So just to put that out there. Olumide, hi. I see you on space. You want to unmute and just introduce yourself? Then we can go ahead and question. I have a few DMs already.
Yeah, good evening, Carl. Great to be on your show. Interesting conversations. Actually, it was just to add to the spices you already put in. I think it's also been an exciting and eventful week in Nigerian capital market. You know, the much talked about dollar denominated federal government bond is set to kick this week. We had so much noise around it, and just breaking news is that United Capital is the lead arranger. So the works is that about $2 billion will be raised. That's the plan. Also, we look at the banks. We saw that the banks were really picking up from their July lows, particularly First, UBA, and other systemic banks. But you know the GT scare, the arc that was not supposed to be, that was called the arc, but the bank refuted that it wasn't the arc, it was a domain issue. I think it created so much buzz on social media, but the stock presently has a year-to-date gain of more than 13%. It's the best performing bank stock. Uh, then we saw Omando slowing down after running so fast. Looked like it was going to break the 50 naira. He had to come back down as low as 30 naira plus before hitting above 35. So The star in the room right now is Julius Berger. We're seeing the fact that also the Naira seems to have settled between the 1,550 and 1,000. So, yeah, just to put a brief summary, I think what the market has seen this week is that the fiscal uncertainty also is playing a key role in the market. Inflation reported didn't go too well with manufacturing and consumer staples, despite the fact that we saw a moderation. Investors still believe that it's still pretty much high for these bottom line companies to make a difference. So that's some key notes here.
Well, no, no, let's do that GT Bank issue quickly. So there was like an issue with their online banking. I saw online people said it was a hack. Then I think I saw on a telecom paper come out and say it wasn't a hack, that they didn't pay on time. Then later I saw a guy come out and say no, 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 they paid on time. It's not a hack, but they paid on time. So, I mean, for me as an investor, broad strokes, does this have any effect on the bank stocks? Should I be worried about my deposit in that bank?
Good question, Kalu. So, look at the price action. What the market is saying, not from our own perspective. What the market was saying, the market pretty much didn't take it too much, and I'll tell you for many reasons. If you look at what happened when the windfall tax came into play, the market aggressively felt that that was going to eat the bank's bottom line. 70% windfall tax, and how FX gains played a major role, knowing fully well that the Nigerian economy is not giving the banks their core margin base. I'm talking of lending. So the windfall tax had a stronger effect. But if you look at the case of the act, like you mentioned, first, users still had access to their apps. It definitely created some buzz around the fact that the bank can't take hold of their domain and concern, but no customers' data was breached according to the bank. And I think I used the bank, and if you look at the stock, like you mentioned, I was looking at the 45 naira mark, and GT is a very interesting stock for those that don't really understand the stock. This is the most valuable bank in the country. It has a market cap of 1.35 trillion naira. It also has systemic players. The stock is exposed in the London Stock Exchange by GTR. So we have investors that are not the shaky guys, like in the penny or retail investor. So it was very normal for us not to see a reaction. Social media felt like, at the normal market like the United States, you're going to see a reaction. The difference between the United States and the Nigerian stock market is that we have over 115 million Americans actively or passively exposed to the United stock market, which makes it very efficient. In Nigeria, last year, CS data said that we have 100,000 active accounts that took part in 11 trillion. This year, at max, maybe double. So, Kali, you could see the difference that we don't really have a really strong base. So, the market should have reacted maybe if it was the United States, but I think the big boys felt like this is not something that what's very concerns about.
Gotcha.
Yeah.
Gotcha. And only the overall, like another question I get is overall the windfall tax that is going to be applied to Nigerian banks. Is that going to be, net systematic negative to the Nigerian banking offers? Is that going to be an issue that there's going to be a one-time tax? And just to explain, this is a tax on realized profit. So if the bank does not realize those FX gains, they don't pay any tax. Is that going to be a problem overall?
It's a big problem. In fact, the issue, honestly, that's why when the news came out first, because just for listeners' sake, I'm exposed to all the listed banks in Nigeria. I buy them not just for investment purposes, but because I write, I analyze, so I try to understand the stock personally. So when the news came out, within 2 weeks, my banking stock portfolio was down by more than 15%. And if you look at UBA and First Bank, at that time, they were going to 25 naira per share. At some point, UBA dropped below 20 naira. That tells you how the news came hard on bank investors. For me, I don't see why that should come to light. Though some banks seem to be immune. If you look at First Bank, for example, First Bank has been posting FX losses for a while, so they don't seem to be exposed to that windfall tax, and that was why partially I said that Femi Todela was in support, because he understands the bank's balance sheet and when their exposure is. But for a bank like UBA, Zenith, GT, definitely to be a concern. Even when you look at Wema's latest result, it was definitely a concern. So it really hit the bottom line of banks, and that's why at some point the banking index was the worst performing this year. So I don't at this point, like you said, apart from Fidelity that really surprised the market, though Fidelity started their public offer long before many banks, they were actually the first. So the fact that they raised their funds beyond uh, market expectation, that was a plus. But when you hear a bank like Access Bank asking SEC for extension, using the excuse of unrest, you know that there's more to than meets the eye. So I think definitely it has an impact on recapitalization plan. It definitely has also an impact on future earnings. So despite the fact that we affirm that some of these are unrealized, but the optics around capping banks in an era where CRR is at 45%, where the industry is heavily regulated, it's not something bank investors took lightly.
Yeah. So I mean, the point again is again. If I'm raising money, or if I want to invest in the bank, I look at two questions I ask myself: the money the bank is raising, is it going to go into existing structure? I.e., will my money allow the bank to raise more earnings, or will my money create the base for the bank to earn more? Should we say more earnings? So, for instance, if I was Bank A, if I give them money, are they going to buy more branches? Are they going to buy more ATMs, which allow them to make more money? Or am I giving them money for already established branches, in which case my funds going to reduce their cost of capital? Let me ask the question directly. If they tax them now, that's a tax in 2023, 2024. Does that imply that going forward that affects my bank's ability to make earnings? This is a one-time thing. This is a one-time tax, but the income was also one time. I don't know if you get my question. The income was one time, the tax is one time. Doesn't that even it out, and then we look at earnings going forward without this tax question?
Because it's not into law yet, Carlo, there's still some disturbance around the bill. I listened to Laj Balogun, the group of FCIB, and I've seen spreadsheet of different reports. They're saying that it should actually start next year, that the Senate and obligated the fact that it will start next year. They will not use the format that it seems to be unfair. So we don't really know what they will use, but like you said, definitely will have an effect. If you look at Zenith's objective is expansion. They are talking of expanding a branch in Paris, in France, because of the francophone countries like Cameroon and Togo. So they are looking at markets around that space. You look at GT also. GT is also looking at expansion throughout their IT infrastructure. They're looking at also bringing new businesses to their bottom line. But for me, to be honest with you, GT, because I've owned GT for many years now, and GT really goes beyond 15 naira. So usually what I do is that when I see GT between the price is trading and the price is, I usually sell and wait for lowers. So with GT doing 100 naira at its present level, it hasn't happened. That to be honest with you. But if you look at tier two banks like FCMB, you look at Fidelity, you look at Sterling, these banks oftentimes have been able to generate more alphas than the tier one banks, and that's because there's so much room to grow, and they are really exploring so many windows. So you look at FCMB, for example, they are expanding. They got some credit from offshore investors. They're expanding to medium scale businesses and female entrepreneurs. They're trying to put in export business through that line just to create a niche in that space. You also look at Stanley, look at the infrastructure they built around the IT. These banks you can really pick. But I think what the jury is like, at some point, with the way the government looks like harming on the banking industry, it seems that they wanted to merge. It seems like you look at what's happening with Providus and Unity Bank. You see line
That government deal, right? But remember, a long time ago, this rumor that Providence was going to fail or was going to fail, and the CBN can say this is our we try to let them fail. It's like what's happening now that the CBN is providing a backstop. So if I'm an investor, I know that the CBN is providing equity into those banks so that I can buy. You see, that's what's happening to those banks to give it the capital so it won't fail. Before you go too far, I just want to clarify the FCMB CEO said only 10% of the bank's forex gains have rise. So this point I'm making that it's a realized tax, which means you've got to literally analyze that tax. So if the naira gets strong, that tax keeps on falling. The naira goes to say 200 to 1, the tax keeps on reducing. Right? Yeah. So the number, it's really if you realize that gain. So what I mean is this: if you bought your dollar at 1,000 and the dollar was 1,200, that $200 naira is what they are taxing. So in effect, if naira becomes 1,000, the tax evaporates more or less. Just want to put that point out there.
Very true. Very true.
Okay, let's get Zero in here. Maybe he has a question, and we'll come back to you. Zero Equilibrium, you got the floor.
If you can hear me,
I can hear you.
Okay. Okay. So I'm just going to talk about bonds because it's on the topic headline. Just a wide, just sharing my thoughts on it. I think any investor here listening would be, I know I've said this before on your show, might want to get more fixed income into his portfolio. I know equities are good, but that's like a long-term play. Why? Because, the fundamentals that should support equity companies listed on the market still aren't as solid as I would like to see. And even though their companies are thriving, there's still some macro headwinds that barely any company could.
What equity? What fixed income do you like? Now we have the dollar fixed income, we have the naira fixed income. Which one do you like especially?
Oh, I like both. Actually, I like both. I like the dollar. I like the naira.
Mm-hmm.
But because the naira is easier to get into in terms of the capital requirement. The dollar, I think, is 10K to minimum. So that's mostly for HNIs and people in the diaspora.
Yeah. So just to clarify to people listening, Nigeria wants to issue a dollar-denominated bond. First time in Nigeria's history. We have euro bonds, but those are dollar-denominated outside Nigeria. This is going to be a dollar-issued debt in Nigeria, meaning if you have dollar in Nigeria, you can take your dollar to the bank and buy a dollar bond, and you get dollar dividends. So, in effect, we've dollarized, in quotes, the Nigerian investment space. But please go ahead.
Yeah, so I like the USD bonds for obvious reasons, because if I had 10K, if I was, as a HNI, lying around, or just like say I'm saving it in my DOM account, it makes sense for me from my point of view, to put it in the dollar bond, at least to generate some income.
That's the attraction, right? That's the attraction. Yeah.
But there are also concerns that I do have. So I don't want anyone here thinking that I'm just saying there are no risks involved. There are certain concerns. Number one, perception and trust. I think if this $500 is going to fly, you need two sets of Nigerians to key into it. Besides, HNIs and corporations locally and diasporans. Because diasporans, like someone in the US, for example, if he looks at the US treasuries and looks at Nigerian US bonds, the yields on Nigerian US bonds should be higher. So it's almost like the same thing, but just at a fairer or at a more attractive.
I mean, make it plain. If you invest in the US bond today, you get 3 to 4%, but it's guaranteed, and the US would not default. The US will not cancel their bond. I think the fear I've heard for people are asking me questions. Carlo, with Nigeria pay? Carlo, will they say you should go and bring your? Everybody is scared that the government will come to tomorrow and bring one new law, and this is the problem with this rule of law. When we say rule of law, the government it comes across as they might wake up tomorrow and say, okay, all this dollar you guys have invested, we're going to tax it. And that's the problem with going back to do retroactive or one-sided policy, that people don't trust you. That if I invest in a dollar bond, you might come tomorrow and say, hey, dollar interest is going to be taxed. I don't know. But yeah.
That's what I'm skeptical about today, because just like you said, if you look at the line bond for me, for example, I have different exposure in federal government bonds, and pretty much because I got them at February. Because when I say February, I came early this year. Now I was going close to 2,000. So I think the savings bond was giving me close to 20%. But my objective then was just to meet my naira obligations back home. So I think but you see, the question for me is like the federal government, for example, looking at their balance sheet and looking at, it has it's a good concept, good, but just like you said, it's easy for the government to pay back in naira, but in dollars, that's another ball game for me. So if I'm going to be exposed to I'm going to be very, very cautious. Though, I looked at what my Euro account is giving me in France. I'm getting 2.87% per year. I'm looking at what Barclays in UK is giving me. I'm getting about 3%. So it looks like a fair deal, because they said it's going to be pegged around the Euro bond yield. And when you look at the 2-year to 10-year, that's around 9% to 10%. But the question is how, just like you said, the compliance, the rule of law, the application, the environmental.
Let's dive deeper into this, right? If Nigeria borrows $1, how do they repay $1? It's going to be from oil sales. It's going to be from, because now it's sales, not remittances. They don't own remittances, so it's going to be oil sales and exports. It's not going to be
like, except the sell capital projects like
NNPC. Okay, so essentially you are saying that if you buy a bond, the repayment only comes from oil and non-oil exports. We can't do remittances or sales, right? We can't, and we've taken most of the oil to NNPC. NNPC has sort of borrowed forward sales of crude oil. So forward sales of crude oil to Afreximbank is happening. We also have forward swaps with JP Morgan and Citibank already happening. So the foreign.
We also have subsidy obligations.
That we haven't paid. $3.5 billion we haven't paid. So essentially, I really want to see is it a ring-fenced FX? I want to see this ring-fenced FX, or are we refinancing the obligations with this dollar bond? In which case, we are refinancing maybe the NNPC and the whatever with this dollar bond to reduce the cost. So, but if you say that, you already said we're borrowing at euro. If we're borrowing at euro, then it's not a refinancing, is it? So I'm getting let's see the paperwork, but I'm not saying, man, it looks I like it. I like the concept. I'd argue that we do it because Benin Republic, just beside us, Benin Republic launched a $500 million bond, and it was oversubscribed. And of course, Benin is targeting Nigerian investors. The target is there's about $10 to $20 billion sitting in dorm accounts doing nothing. So I think rather than just keep the 10, the idea is that they can entice dorm account holders. Even if you bring out 10% and you invest in dollar bond, they've made their money in dollar bonds, right?
Yeah, but the truth of the matter is that big boys now are using their dollars, particularly in the investment market. So if you look at Cardinal Stone, look at Stanbic, look at GT, because I've been able to do my survey. If you look at the growth of Stanbic IBTC asset management, their dollar exposure did so much different. They increased, though the rate you get, for example, if you invest in dollar money save bonds, money market, you get about 7% a year. But in GT, you must hold for a minimum of 180 days, and you get close to. So we have banks that are already putting that into play, and that is why I'm a bit worried. Like, okay, banks are already eating into the pie already, and investment banks are already positioning themselves. Will they really get that 2 billion in the long term? I don't think so. But just like you said, it's a good idea. We can never tell how the Nigerians in diaspora react to, because definitely we have lump sum of capital among these people, particularly in Western countries. So If they really show interest, the difference will be. But the problem we have in Nigeria, like we don't have in many financial capitals, is that our embassies don't do their jobs. Rather than playing around, we, if we had publicized this financial prospectus early this year, trust me, the feedback would have been awesome. So that's another problem. How many Nigerians in diasporas are aware that we even have a dollar bond? So these are things that
Yeah,
the
but would
government
you?
should
I
be
mean,
up.
we had a protest march last week. I don't think any sane government would have actually sold bonds when people on the streets saying that they want the government to quote unquote leave or be changed or to. So it's bad timing to sell that bond or to do a roadshow. Even the roadshow was very very muted. I know I published it. People were telling me show me proof to show that people really didn't believe that this was happening. People were like, hey, show me proof it's happening. Such a bond is a landmark bond. It's the first time Nigeria has done it. It should have been all over the waves, and it should explain. This is the thing again. Explain to people what it is. It's a new thing. It's a dollar bond. It's a hedge on inflation. You invest in dollar, you get paid back in dollar. There are many folks that have $500. So if you come together and you buy a dollar bond at $10,000, you can get your returns back in dollar. It's a good hedge. It's a very, very good scheme if the government would abide. And I think the Nigerian government has never failed on any securitized debt since Nigeria was created. Any securitized debt, they don't fail to repay. So,
I
yeah.
think we should do Carlo, we should do, because I thought also to it's just that we forgot before doing Obasanjo's time where this back we could not meet some obligation. That's why we asked for debt cancellation and things
No,
like
that
that.
was securitized. So, they said the point I make, that's why I said securitized debt. Most of those loans that we got under Obasanjo, what happened that Nigeria borrowed $4 billion, then refused to pay. So the interest was capitalized back to the principal. So
Yeah.
the principal rose to 39 billion. Right, that's what happened. Yeah. All right. Let's get Oxley Tech here. Oxley Tech, what's up, man? Oxley, you got the floor.
Yes, I'm here. Carlo, how you doing today?
Well, we're doing well. Go ahead, sir. What's happening?
Okay, yes, not much. So I just want to talk about briefly the windfall tax, right? Just like you said, I read a paper that was written by I think it's KPMG, trying to rationalize what the government is doing and try the concept of it looks like it's double taxing. I understand the philosophy behind what the government is doing or trying to do, that they are trying to balance a deficit in one side with a surplus that happened in the banking system. There was a deficit in the manufacturing in terms of losses. People not declaring profits, for almost since 2023, they are basically declaring losses, but those profits were sitting elsewhere in the bank. So um, I actually did an analysis of the tier one banks. I looked at their financial statements for 2023 and noticed that I think it was most of the, just like you said, most of the banks didn't realize that profit. So if you look at their other comprehensive income, you would see that they were very prudent in the way they reported it. I think it was only GT that you know that like realized a chunk of what they have, their FX gain. But uh, Access Bank, UBA, Zenith Bank, they were all very prudent in terms of the way they reported it. Yes, it's sitting on their other comprehensive income, but most of it was not realized. So and I doubt how the government will go about it. But KKPMG actually wrote against that, and that's that. Then coming to the equity market. Sorry, not the equity market now, but fixed income securities that the federal government is pushing out. Well, I would say that for me personally, we should all be very prudent and calculative in doing some of those things. I already know that in Nigeria, some asset management companies already have this. dollar funds. They have it in their portfolio. There's some asset management companies, even Stanbic, FSDH asset management. If you go to some of the products they have, they already have these dollar funds running. It's already so it is the government trying to float their own. But if you go to Quest, FBM Quest, some of these asset management companies, Coronation, they already have these dollar funds running, and people are already buying into it. And well, the rates, I think the worst the good the best I've seen, I think 8%, 6%, between 6 to 8%. So it's just, I don't know how the government, where they want to baseline the rate for whatever what's it called, bonds or treasury bills that they want to float. But we all need to be careful. For me, I see everybody should be prudent. I see it a little bit as a bubble, because for the FPN, for the federal government, bills and bonds today, if every investor call for their funds today, the government will default. So if you say that the government, we have not defaulted as a sovereign, the rates that the government, the interest rate that the government is paying on those bonds and treasury bills are quite high. So if half of the people that are holding those papers call for their funds,
yeah, but how would you call for a paper in a bond? You can't call for a paper in a bond. Like, you can't go to the bank and say, I want my money back. You can't do that in a bond.
I understand. It's tied to. I'm talking about. Okay, for example, what I'm talking mostly is treasury bills, which are the 90 days, the 181 days, and the 360 days. So if for example, I'm looking at hypothetical now. If after the 181 days, and half of the people that are holding the federal government treasury bills decide to call for their money, including their interest.
Yeah, but what you keep you just repeated again. You can't call for your money in a bond now. That's why you're repeating that. You can't call.
No, I'm talking of treasury bills now.
How would you call it back?
A long term.
Yeah, how would you call it back, treasury bill?
So what I mean is, when the 180 days runs out, why the government? Hold on, look at my analysis. The government always have a headroom, because when the 180 days runs out, people roll over. 80 to 85% of the people holding it rolls over and get their upfront interest rate paid. So what I'm saying is that after the 180 days or 360 days, and 50% of the people that are holding it say, I don't want to do it again, give me my money back.
They will print Naira and give them, my brother. That's why it stays issuer free. For the Naira bonds, no problem. The issue is the dollar bond.
So I'm bringing that to the dollar now. So if they will print money and give them, and what does that do to the economy and inflation?
Yeah, but
so that's my point.
Don't
yes.
Just so people are listening. So when you do sovereign bonds, treasuries have no issuer risk. So Zimbabwe bonds have the same risk as US bonds. It's issuer risk, right? So for Nigerian Naira denominated bonds and treasury bills, yes, they will print Naira and give you. So no problem there. The wahala is, like we said when Olumide was talking at the very beginning, it's a dollar bond, because we can't bring back dollar. So for Naira bonds, you are fine. The rates are almost 20. Last time I saw 20%. It won't beat inflation, but it's for income only. If you're buying a bond in Nigeria, like a treasury bill or for FGM bond, you are looking for income from a safe source. These sovereign bonds are the safest investment in Nigeria. That's what it's for. So you can't call for your money back. It's going to be, they will print Naira and give you. Yes, we get it. It won't beat inflation. Yes. The issue, and I agree with you, it is not the dollar bond. If you buy a dollar bond, Nigeria has got to generate income to pay you back in FX. And Olumide and I have always said that it's only going to be from exports. We can't count remittances unless they sell something. Maybe they sell 5% of LNG. And that's the risk for you. And to your point about that other banks are already doing dollar bonds, this is going to be tax-free. I read it's going to be tax-free. So if you invest through the federal government for this bond, I think you will get, is tax deferred or is it tax free? One of them.
You are saying tax free in terms of there will be no withholding tax?
Yes, that's what I read on the dollar bond, correct. I read it's either tax free or, yeah.
I don't think they will do that.
It's there on the paperwork. So don't say you don't think. Just Google it, and then I think it's there on the paperwork that it has some tax benefits. I'm not sure if it's tax deferred or tax exempt, but I did see it's tax. It has some tax benefit there that you might not get if you were doing the normal one. That's the advantage really for you if you were trying to do that for $1. But I get your point. I'm not trying to say you're not right. I'm just saying, just to make sure we have the full context. Yeah.
Yes, but my final word would be that my question, which is I'll put it as a question and also my own thoughts, which is at what interest rate would they float?
We'll see.
The dollar bond?
We'll see. Olumide said they want to.
Once it becomes more than what is obtainable in the United States, which is the country that you are floating the currency on, I mean, I don't think it's going to be beyond 5%. I don't think so. Anything above that, sorry, I don't know how it's going to be.
It's going to be above the US rate. They cannot pay you what the US pays you. There's no point. They're going to pay you more than the US pays you. US pays you 4 or 5%. Nigeria will pay you from 8% because Eurobonds today are 8%. And Eurobonds have a higher security. Yeah. So they're going to pay you from 8%, I believe. That's what I would say. But remember...
that's what the minister said. Actually, the Minister of Finance said that it was going to...
Correct.
It should reflect too. So, and just like you said, Kalu, there must be a premium because why are you going to tell when people have the option to hold US debt? Why are you going to now say that they should hold Nigeria debt at the same rate? Definitely, you have to. Then the tax benefits, you are totally.
I'm not going to limit it. Please, can you drop me and bring me up again, please? Thank you.
Yeah. So the tax benefit, Carlo, if you look at the tax benefit, just like you rightly said, one of the advantages I realized about federal government investment, which a lot of investment houses will not tell you, is that when you invest in their mutual funds, they are liable to tax. They are liable to different forms of charges and things. But the federal government securities net and the safety it gives you. The only issue with, like we mentioned on the dollar, is the fact that this is a currency that Nigeria has no jurisdiction, and we know the state of the economy. But in the long run, I think it's an interesting concept. Where I'm really going to be concerned is that though United Capital, they did arrange a very systemic investment bank, has good tentacles around different African countries with UPA. But where I am more concerned is with Nigerians really tap into this, with the fact that banks are raising money, there's so much investment around the corner. Dangote Refinery, it's going to list by Q1 next year. Kalu, to be honest, it's really going to be very, very tough to get 2 billion. They might get $500 million, the initial target, but I don't think the 2 billion. I think it's castle is in the air, billion castle in the air.
Yeah, I hear you, Linda. I mean, it just goes back to this issue of we are going to borrow in a foreign currency we cannot print, so we have to be very clear. I think the target should be the diaspora and the DOM account holders. That's really the target. 3-4% if you leave your money in the US. DOM account 0%. If you do this bond, you get some interest rate.
I think you are.
Yeah, Olumide. Yeah, I hear you. I mean, thanks. I think the main thing Olumide is going to be they are targeting the diaspora, like you said, and the DOM account holders. Those are the two main guys: the DOM account holders and the diaspora. And those guys have liquid cash that can invest it immediately and want a higher yield than what the Eurobonds are doing. So let's see. If they go to diaspora in America and they offer a diaspora in America 8%, $8%. Wow. That's his rent right there, 8%. So he gives you $1,000 and you're going to give him, that's a lot of money, 8%, because inflation here is now below 3%. So if I take a HELOC on my house and I take $100,000 and I invest in Nigeria, right, and I get 8%, what's that? 100,000, 8%. Is that $8,000?
Yeah, $8,000.
That's $8,000 clear for doing nothing. And I'm borrowing at what? What rate am I borrowing HELOC for? Maybe 4, 5 if I'm borrowing. But if I have the money, I'm not paying it. That's huge risk. If Nigeria pays you, fine. If they don't pay you, man, you're. But yeah.
But look at what happened to those guys that invested in Ghana bonds. Look at
Ghana don't get money now. Ghana don't get oil. I mean, I agree. You're right. I mean, Ghana was They went too fast. They were trying to copy.
I have a question.
Hold up. They were trying to be like Nigeria. I think Ghana refused to learn from Nigeria. Nigeria had the Dutch disease. The Ghanaians' own was even worse. They got this small amount of crude oil and they sold the crude oil ahead of time and then started spending. Just started spending. So at a point, they were sustaining that growth with borrowed funds and it went up, they were dead. At least Nigeria has crude oil. Nigeria has remittances. Ghana was really a basket case. Let's get Luca in here. Luca. Lunakes, I get it right.
Mr. Kalu, you said something about printing money and giving to investors when they call to take their money out. I need clarification on that, please.
I said that it is called issuer risk-free because if all things fail, the government can monetize its debt, which means they can simply print and cover that debt. That's what I tried to say. The point I was making was that with the Naira issues, it's less risky to Nigerian balance sheet than the dollar issues that we cannot print dollars. That's the point I was making.
Okay, but making that statement, I don't know, because is that good or bad?
It's a factual statement. It's a factual statement. I'm not. Yeah, it's a factual. The U.S. does the exact same thing. Monetizing the debt means that you are printing. The Fed is buying the debt of the Treasury, monetizing the debt. So that's just. I'm not saying it's good or bad. I'm just saying that's what happens. It's a factual statement.
That was why we were arguing with Elon Musk a few days ago.
True.
That was why we were arguing with Elon Musk 2 days ago that we were saying that America, for example, one of the advantages they have is that they can export because there's the demand for the currency. The currency is reserve currency. Almost every country around the world owes the dollar. So no country, the Nigerian naira does not have that functionality. No, it's not value. It's
advantage.
It's about the advantage. The US dollar, for example, is not the strongest currency in the world, but it's the most widely used currency in the world. You see the advantage, and the US has the strongest army, US has the strongest economy, US has military bases in more than 79 countries. These things don't come to. So they have the advantage for them to use their currency. And that was why I said that you could see the fact that they're printing so much money, inflation is still lower than 3%. If Nigeria has the deficit America has without such advantages, trust me, the Naira will have gone to the Zimbabwe dollar. So then come back to you.
Yeah, I mean, let me give you a story. There's a guy called, I told you guys to study John Law. There's a guy called John Law. He was a gambler, British gambler. He was chased for his debt. He ran to France. What he did in France, he convinced the king. The king was 5 years old. So he convinced the king's regent, the guy that ran the economy of France, to say, hey, issue a currency. It's like issue an NFT, a token. That's how you understand it. Issue an NFT. But he then told the king to say that all debts, all taxes had to be paid back with only that token. So remember, when we look at money today, we think that money today has been the same as money ever since. In the past, anybody could create his own money. The dollar, for instance, was just the currency of the US government. But the US railways had their own currency. US grocery stores had their own currency. Everybody had their own currency. So what John Law said was just mandate that everyone had to use your currency to pay taxes. Once he did this, the value of that token went up in price. So look at it now in treasury bills. What does the government say? The government says this is legal tender, which means that the dollar, the Naira, the Zimbabwean dollar is legal tender. So once they print it, you need it to pay debts. Hence, it gets value. So paper gets value because it's now officially legal tender. So now in Nigeria, the Naira is legal tender, but the government is issuing a dollar bond. So the dollar is not going to be legal tender, but it's now going to be quote unquote an allowable currency because you are trading in that dollar in the borders of Nigeria. More like a euro bond that is traded outside the borders, but it's going to be a dollar bond traded inside Nigeria. So big difference there. Lulu, did you have a question? Lulu Nakas.
No, I just wanted. Yeah. I just wanted.
You just went to do what?
Yeah, I just wanted to make a contribution, Carlo. You just made a very big statement right now, and when you make statements like this, I still wonder why you still dispute the fact that Bitcoin will not catch up later in future. People will not adopt it because you just alluded to the fact that money has not been the way it is right now. In fact, the concept of fiat is actually a new concept. So people don't think of money outside, paper that is issued by the government. Before now, people had their own currencies. In fact, one pump seed was one of them. Stones was one of them. Shells. Before we started using precious metals, and right now we are using code because Bitcoin is actually code. So money, people should not look at money as only what government issues. Money can be anything really. So the idea of Bitcoin, it's something that a lot of people will see value in later, although it has its own challenges, but it can be money, as it is. Then the issue of the government bond, the dollar bond, I will tell you for a fact that it is very risky to buy the Nigerian dollar bond. Have countries that sovereigns that issued dollar bonds, succeeded. Yeah, some have succeeded in raising the money they needed and paid back, while a lot of them failed. Some of them failed. We have countries like Venezuela, Lebanon, Argentina, and most recently Russia, which failed as a result of its sanctions. So does Nigeria have the capacity to pay back its debt? Maybe, but I highly doubt. So I think it's one of the most risky things that you can do right now, buying the Nigerian dollar bond. So that's my own 2 cents on this.
Yeah, well said. I mean, again, remember that risk is return. Let me put it this way: that return that you make is the risk, right? So if there was no risk, like the Bible says, just bury your dollar in the ground and then get 0%. So if you want to make alpha or volatility, is the what creates that return. So if you just want your dollar safe and secure, put it in the ground. If you want safe and secure, buy US government bonds and earn 3-4%. If you're a real risk taker, you think you want to quote unquote double the return on the US fixed income, you want to maybe shoot for 8-10%, do Nigeria. I mean, there are countries paying more than 8%. Turkey is paying much more than Nigeria. Venezuela is paying much more. Zimbabwe is paying much more. So it's really your risk appetite. Really, I tell people there's no good or bad investment. It's just your risk appetite. If you want to make more, you go on that yield curve and you put your money there. If you're not risk adverse, just keep your money where it is and just put it in the ground or put it in the US bank, and then you are all nice and handy. On Bitcoin, right? I don't have an issue with Bitcoin. For me, if Bitcoin just stopped at the part that they want to be a transfer mechanism, it's a far superior mechanism for transfers. If you want to send money from Nigeria to the US, or better still from the US to Nigeria, you pay a lot. You pay almost 4% or so, or 3%. Africa pays the most to send money from the US to Africa. Other countries is very, very cheap. We pay $40 to send any amount. That's the wire fee, $40. Bitcoin is nearly free. If Bitcoin simply says we're going to do transfers, nobody will argue with them. I think the part where Bitcoin lost is when they say they want to replace dollar. Every government is the government because number one, they can kill you. Number two, they can jail you. Number three, they can issue currency. Any government you tell they are going to take away their right to issue currency will fight you. So Bitcoin has done poor marketing initially to say they want to replace dollar. How can you replace dollar? It's not possible. You can't replace even Naira. So no government will allow you to stand if you're going to replace that currency. But what if Bitcoin says, hey, we want to be a means where we can transfer money, it's foolproof, it's cheaper? Of course, everybody would adopt it. With that line, you can get into the door, and then when you are now an established currency, you can then say, okay, we want to replace dollar, because dollar didn't wake up today. Dollar replaced the Spanish and the English and all that. So that's just my take. I don't have any issue with Bitcoin. I hold a bit of cryptocurrency, but in effect, remember that if you hold Bitcoin in itself, just holding it in itself, you're earning no interest. Gold, if you hold gold by itself, you earn no interest. But gold has a use. Gold has jewelry. Gold is used in cell phones. Bitcoin is what we call the greater fool theory, which is a real theory. Bitcoin will only rise in price when there's a new buyer. Apart from there being a new buyer, Bitcoin has no value. It's got no intrinsic value. The same way gold, platinum, for instance, it has to have a value. That's really where I am on Bitcoin. You've got to show value, utility, not just to say it will, you know. All right, guys.
Yeah, but that's not correct. Saying that Bitcoin does not have an intrinsic value, it's more of placing a tangible thing, saying Bitcoin must have a physical use case. No, as I speak to you right now, a lot of people are seeing the value of storing their monies, using Bitcoin as a store of value, against inflation. And
but that's not true. Even if you look at the numbers to say whenever there's crisis, whenever there's crisis, gold goes up, Bitcoin goes down. Bitcoin is not a store of value ever. I've posted it many times. Look at it. Just whenever there's wahala in the Middle East, it goes down.
It has served as a store of value, because if I wasn't saving in Bitcoin,
you can't say.
When the government went on a printing charade in Nigeria, I would have been out. I would have been wiped out. You understand? But
a bag of rice is a store of value in Nigeria.
Bitcoin.
A bag of rice is a store of value in Nigeria. A bag of cement is a store of value in Nigeria. I can name a paint can is a store of value in Nigeria. There are many things that are store of value but are not investments. So you can't say because it retains its value, then you should go do that. The point I'm making and I'm standing is that Bitcoin in itself has value because the next person wants to buy it from you at a higher price. That's why it has value.
Carlo, that's not entirely correct. Because, see, for instance, do you know that during the protest, a lot of people's accounts were frozen, because they tried to protest. They tried to hold their government accountable.
How does Bitcoin solve that?
Of course, with Bitcoin, can the government come and seize your money? If I send money to someone, can the government seize?
Tell me how you send it to me. Tell me how you send it to me. Sure, walk me through. Walk me through. How do you send it to me? How do you send it to me?
Sending Bitcoin to you, if you have a wallet, it's just
how?
10 minutes.
How do I get a wallet? How do I get a wallet?
No, you can get it through. It's just
wallet through how? How do I get it?
You just download the wallet.
From where? So I go to the internet and I download a wallet, right?
Hold on, Carlo is trying to make a point. Please make your point.
You could create their paper wallet, their offline wallet.
But that wallet, whose name will be on the wallet? Whose name will be on the wallet?
Carlo said something about how you got the wallet.
Whose name will be on the wallet?
The thing is flashback. I think what Carlo is saying, and I think I got into a lot of crossfires last week, and that pretty much people don't understand this. I own a decentralized wallet. I own centralized wallets, and I understand how government work around finance. Yes, crypto itself has decentralized principle, but what Carlo is making you understand is that as long as we have government, what we call decentralized is not really decentralized. And I spoke about the fact that I just even reported the news that the federal government froze 35 or 37 million, and critics were like, man, you're an idiot, that the news is not possible. You can't freeze. And I'm making you understand that, see, we have different forms of wallets. They are saying accounts. People don't really understand the application of it. If you check the CI, the FBI's script on cryptocurrencies, you can freeze a centralized wallet. You can use smart contracts to disable tokens even in a decentralized wallet. You've seen it in the case of Tita. So what can you simply telling you is that as much as cryptocurrencies are decentralized in nature, as much as they have use cases, in traditional finance, they don't really have that word intrinsic value. Warren Buffett said it, James Diamond said it. So I don't think it's fair for us to start making it an issue. We need to look at the traditional finance aspect of what we call intrinsic value. you need to understand why they say it doesn't have an intrinsic value. It's not, it doesn't mean that it has no store of value. It's still an argument ongoing. But the reality is that cryptocurrencies are not decentralized as we think they are. And I'm making sure that governments in different countries have seized, frozen, confiscated cryptocurrencies.
But Olumide, I'm talking about Bitcoin. We are talking about cryptocurrency.
Okay, but let's go back to the basis. You want to hold Bitcoin? I think you can hold Bitcoin and you can make money from it. I'm not against that. I'm not against that. Like I've said it clearly, and you can stake. I hear you, bro. Listen. I hear you. If you hold Bitcoin this year, you've made a lot of money. Last year, you made a lot of money. There's no problem with that. You can also even stake your Bitcoin and get fixed returns that are almost higher than investing in a dollar. So Bitcoin gives you staking. Bitcoin gives you inflation hedge, because if you hold Bitcoin and you don't hold Naira, you give yourself that hedge. I get all that. I'm not debating that. The point I am making, and I'm being factual because I pull listening, when you hold Bitcoin, the value derived from the fact that the second person is going to buy it from you. That's where the value is from. If you hold gold, gold can be used as jewelry, it can be used in your mobile phones, it can be used in a dentist, it has a use case. If you hold wheat, wheat can be used to make bread. Bitcoin in itself is a digital token. The value is derived from the fact that it has a market. And I'm saying, once there is no market, it has no value. I'm not debating if you can make money from it or can't make money from it. If you want to hold it, it's what we call a risky investment. If you hold a risky investment, you are liable to, not all things being equal, you're liable to make more returns from it. So if your risk profile is allowable you to do that, go ahead and do that. I'm not hitting Bitcoin, knocking the head. I think it's fine. It's fantastic.
Exactly what Morgan Stanley's MD Chief Goldman said. Exactly what Carlos said. The use case is not, it's their own issue. That for them, you can get exposure because it's something that rose from out of nowhere. But like he said, will he buy it now? He said no, he won't buy it now because he rather hold on to things he believes. So we need to understand those traditional finance definition of this asset. I understand crypto guys, where you guys look at the fact that fiat currencies, inflationary, things like that. Don't put in that Bitcoin was created to defeat that purpose. But the reality is that we live in an entity that when a system is not regulated, there is so much trouble. One of the problems crypto market has is heavily deregulated. We've seen so much scams. Look at how much Nigerians have lost in crypto projects, crypto entities. So you need to be very cautious and careful and understand the limit that nothing is absolute in finance. Nothing is absolute, despite the fact that the textbook will tell you that it's a decentralized asset. Thank you.
Excellent. Let's take someone else. Let's take K. K, what's in your mind? K, you got your hands up. K, what's in your mind? Okay, let's take lifelong learner. Lifelong learner, what's in your mind? Go ahead. Hey guys, your hand is up. Lifelong, what's up?
Good evening, Mr.
How you doing?
Yeah, can you hear me now?
I can. Go ahead.
Thank you, sir. I've been following all along. I can see what you're doing, the good things you're preaching. I've been following. Thank you so much for your words so far.
Thank you.
I just want to add a little comment on the BTC. Yeah, Oga Carlo, I think I 100% agree with you. For now, BTC, I think is more like an NFT. Of value. Like with time, there is what we call, I think Mr. Olumide has been following up with this space with DeFi and all that. So there is what we call zero knowledge proofs that will still come in future on BTC. So BTC, people are also buying it for the technology that will come on. It doesn't exist now, but it will exist in future. So I think that's another reason some group of people are
That's
also
a good
seeing
point.
it like
That's a good point.
future investment. It might not be now, but in future.
That's a good point. I concede that point. That's a good point. That you are buying today for what will happen tomorrow. Interesting point. I concede that point to you. Yes, sir. I agree. Good point noted. Let's get K. K, what's your mind? Okay, okay, let's get no such thing as waste. Interesting Twitter handle. What's up? No such thing as waste. What's your mind? So go ahead.
Hello, good evening, everyone.
How you doing, sir?
Well, I'm fine.
Yeah, go
I
ahead.
was going through. I know. Fiat currency has really
Oh man, we're gonna do.
been eroding over the years since 1971 when Nixon came off the gold standard, and it's more like everything's pegged onto every currency is pegged onto dollar. So as dollar erodes,
Your audio is kind of
it
low, sir.
affects almost every other currency in the world because it's so. Sorry.
No, go ahead. Go ahead.
No, so I had to just could you if you could explain deeply what the milkshake theory and the quantiline effect is going on, is how it's affecting other countries, and which avenues can one use to hedge against such and preserve your funds.
If I heard you, your line was breaking up, but if I heard you correctly, you are asking about how you can hedge your funds. Is that what you're asking?
Yes.
Okay. All right. So good broad question. Let me just see if I can answer broadly. So when you say hedge, you are trying to protect it from something. The most common hedge is against inflation. Another hedge is against a loss in purchasing power. So inflation means you're trying to protect that asset you have from losing its ability to purchase the same items today. That's one thing you're trying to do today. So the most common hedge is to go to an SI unit, to go to a base currency or base commodity. That's the most common hedge because in the past, like you've alluded, every currency was pegged to something. So all currencies in the world were pegged to something. Either it's gold or a commodity. It was always pegged to something. Then you would then issue a currency to denote that this item exists in the safe, but this currency note stands as a substitute to that thing that exists in the safe. That's essentially what currency is, right? So when you want to hedge, you want to go back to that quote unquote base. You want to try to buy an asset that is tied nearer to what was hedging your or what was giving your currency value. The most common is gold, but you can't carry gold around the whole place, right? What about commodities? You also can't carry gari or maize around the whole place. So folks like to go towards currencies. What currencies? Not the US dollar, right? Perhaps the yen, the Swiss franc, even the Australian dollar, the New Zealand currency as well. Those are traditionally looked at hedged currencies. Those are the currencies you run to if you want to protect yourself from volatility. The dollar is the reserve, but it's not a good hedge because it does lose value. The Swiss currency is very strong, but it's not a reserve currency used across the world. So if you want to hedge with a currency, that's where you want to run to. The other thing is to hedge, say, with a bond, right? You want to say, I want to earn a bond that if there's inflation, perhaps it protects me. I think the US government issued inflation hedged bonds. They're called Q-tips. So if you buy them, QTIP, you get the fixed return, but you also get an inflation rider, which means if inflation goes up, the US government pays you more. So to hedge means you are going towards something that was previously a base for a currency, either through a commodity or to a currency. If you're going to a commodity, like I said, the Swiss franc, the yen, Australian dollar, New Zealand, those things are very, very good. If you're trying to go towards a commodity, perhaps gold. Now you have gold ATM machines. If you go to Costco, you can. If you go to Dubai, you can buy gold from the ATM. If you want to do that, keep solid gold and swap to fiat currency, perhaps. But if you're a big time investor, You want to just maybe look at buying a Q-tip or buying a mutual fund. There are many mutual funds today that allow you to ride out volatility. If you want to hedge against the market falling, you buy the VIX. If you want to hedge against the fixed income uh, um, interest rates going up, you can buy it on the fixed income market as well. So that's the way to do it. I don't know if you have the skill to do it. You want to talk to your advisor, and then if you have a problem or you say this is what I'm concerned about, they can give you a way to do it. But that's just broad definition of what you want to do. Hope that helps you, sir. Perfect. Zero equilibrium. Sorry, your hand is up.
Yeah, Carlos, sorry, I went over that time. I think it was network.
Oh, sorry. Yeah, I can.
Okay. So yeah, I think we've talked a lot about the USD bond and concerns have been raised. I talked about perception.
Sure.
And trust. So I just want to address the risk aspect because from our side of things, we really do not see that it's as risky as people perceive it to be. I think it's
what's your side? What's your side? You say your side. What's your side?
I mean, my side of the, like, say, my perspective on the market.
Okay.
Like, basically, yeah. So, why I think so? Okay, first of all, it's okay, it carries risk, yeah. Yeah, the returns are higher, but at the same time, we don't control the currency. So, whoever is looking at it, the target market diasporas will look at it like, okay, well, if I am going to forsake the alternative, that's US Treasuries or US bonds,
yeah,
for this which pays higher, what are the odds that I will get my money? So I'm going to address that question. What are the odds you get your money? Why do I think it's a good idea? Why would I tell my clients or whoever or my friends to invest in it if they have the money? It's a 5-year bond, right?
5-year.
You alluded that it should pay at least 8%. Yeah. So let's put it at 10%. That puts the interest cost at 50 million per annum for 5 years. Yeah. I wouldn't worry too much. Why? Because the retail Dutch auctions that just happened, that I'm linking it to the depletion in our reserves by $381 million. So that's almost $500,000. What am I saying? I'm saying I don't think $500,000 is going to be a problem for the federal government in 5 years. I think if this kicks off, I still have a doubt. I think it's probably going to be undersubscribed. But if it's not, if I'm wrong and it's oversubscribed, I think it's going to be a priority case, for this administration. But then that now includes what they call political risk, because the duration is 5 years, meaning a new government comes in 2027, 3 years from now. We know how the country is and how unstable it could be. And someone mentioned or you about regressive taxes. They could just come and say, okay, we're going to tax you guys when it's not supposed to be taxed, things like that. But barring all this, I really do, of which the political risk for me is the highest. But I do think that I'm skeptical on the naira, so I'm skeptical on assets associated with the naira that are not fixed income. So that's where I now have 2 questions from. Actually, 3 questions from Mr. Olumide. Number 1, Mr. Olumide, do you think, because some people have $1,000 in their DOM account that they're keeping for years, and people 2,000, some people 500. No one has that. Not everyone has that 10. So, do you think ETFs should be involved? People who could actually pool funds together. That's the first question in this USD bond. Second question is sectorially, how would you advise me or someone to arrange their portfolios? Like if someone say I'm looking for defensive stocks, income stocks, and a little bit of growth. So how would you advise me if I want to put 50% of my equity portion of my portfolio in defensive stocks, 30% in income stocks as value stocks that pay dividends, 20% in growth stocks? That's the second question. The third question would be I see your post about how much neglect the Nigerian population gives to the stock market in
comparison to other developed countries, and so what do you think can be done to change that? Do you think it's a structural problem, or do you think it's just like a thing of more financial literacy needed, or more financial education needed for the public? So that's the third question, Mr. Olubimi. Thank you.
Thank you for highlighting those concerns. So let me start. I'll try and be brief. So the reality about the Nigerian economy is that many people are not like Kalu. So why I say many people are not like Kalu is that Kalu is a Nigerian diaspora that is exposed to different assets, has skills that is relevant in different markets that can earn him FX. The average Nigerian does not even earn above 150,000 naira, much less FX. So when people start saying the naira is crap, the naira is this, the stock market is this, it becomes a problem for me, because you have to start from somewhere, right? And if you look at life, you have to start with what is available. Just like what Carlos said, the man that buried his talent did not get interest. The man that used one talent to get two grew and was rewarded. So you start with what you have first. And what you have, unfortunately, might not be stable, but you have no choice. And that's the naira. So another problem is bad mindset about the Nigerian capital market. My daddy invested so much money, he lost so much money. The problem with those kind of narratives is not because they are not true. The problem with those narratives is because they are extreme. There are also certain people in the population that invested in the stock market, that sent their kids to private investors that I'm aware of, that built houses and did a lot of great things. Now, the question is that the Nigerian stock market is not efficient. It's not like what you have in the US. Also, the UK market is not like the US. I invest in UK, I invest in different European markets. I can tell you that nothing is like the United States of America. So if you are comparing the United States of America, I think you are in for a joke. Then you also need to look at your earning capacity, your level of knowledge. Nigerian stock market is easier and safer to invest. Why? Because the maximum you can lose in a day is 10%. The maximum in stock and go is 10%. So you cannot be so dumb or so that when you see your asset dropping at 30, 40, you need to take your losses. In US stock market, an asset can go 30%, an asset can also go down 40%. We've seen that, though there are circuit breakers now. So you need to take advantage of what you have at your disposal. And that's why I said, apart from the fact we have a disposable income problem, we also have a cultural perspective. Those people that invested in US, because I was investing during the 2001 tech crash. My older cousins that invested, they were swearing for tech stocks. Tech blew in America. It turned to a bubble. The Nasdaq dropped by more than half 50%, half its value. But look at what we are living in the tech era. Apple, Google. So efficiency of the market improves over time. Nigeria is not the way it should be. But I can tell you that the Nigerian capital market has evolved. Now I can look at my market makers. I can look at bid spread. I can look at different things. And that's why I said that, start with what you have. Because the reason why I say start with what you have is that you have to improve your earning capacity to even be able to make FX. If you cannot if you cannot earn in naira, what makes you think you will do better with earning? Because you're competing around billions of people, and there's a wealth gap. So you have to start by understanding how to invest, how to be disciplined, how to grow, and that's where personal finance plays a major role. So the excuse that Nigerian stock is not reliable, leave that aside. You want to gain the knowledge so that you use that knowledge to invest. Because if you cannot swallow naira losses, how would you swallow dollar losses? If you cannot deal with the inefficiency of things within your system, how would you survive? That's why I said that, if you are a tribal person in the country, for example, when you go outside, you're going to have a lot of problems. So you have to really understand how to deal with whatever you are. If you are from a rich home, you can start with dollars all around. Nobody's causing anything. But you see, the problem in social media is that many people live exaggerated lifestyle. Many people say things they are not. We all knew where we started from. many of us, our parents are not Dangotes or Enimilu, so we all understood that we passed through some rope. So you have to learn the rope. And the good thing about investing is that it's just like science, the periodic table. Cash on is cash on everywhere in the world. Investing rules are the same. It's just the market fundamentals that are different. So you start by understanding those perspectives. Then, the Naira outlook, like I've said, and Carlo have really affirmed that many times. Crude oil has a strong correlation with the Naira. So no matter what the CBN does, it can only buy time. But I think for us, especially the younger population, what we need to work on is our earning capacity. And while we are criticizing the government, because we cannot just wait for government. We see how unreliable the last decade was. For those that waited under the Buhari government, you see what have happened. So you cannot say, okay, you're going to wait under. So while you're still, you have to get to do something. And inflation is high. Devaluation is, so you really need to put exposure. So for me, I say the easiest place to invest for every Nigerian is the Nigerian stock market. A bottle of Coke will buy you 25 different types of stocks in the NGX. So you can't try that in America. Do you know how much $1 is to? Do you know how much?
I support me for that one.
So no, I'm just trying to make you, because the truth of the matter is that, see, you have to start from somewhere. If somebody gives you $5,000, good. You can ignore the Nigerian stock. I don't have a problem with that. But you don't have something, you have not eaten, you are complaining, and you don't want to start from sorry, nobody's going to help you.
Interesting.
And that's the problem I have. That's the problem I really have with Nigeria. So apart from the fact we have big disposable income, cultural problems, the fact that people give a bad name on a market. Tony Nimolu has about 7 successful businesses listed on the stock market. If you look at each of those investments, because I have exposure in all of them, it has done better than the average European stock I invested last year. Now, the question is, why am I investing? Because apart from the fact I'm Nigerian, I happen to understand Nigerian businesses better than foreign businesses. And I understand the market. People hold Nigerian stocks like US stocks. We are going to get into trouble because American companies are usually older and more efficient. Nigerian companies are younger, inefficient, and unstable. You need to understand these things. You don't treat an American woman like a Nigerian woman. I always say these things many times. Despite the fact that they are both women, they are culturally different because of environmental and
that's an interesting analysis, Olumide. Very interesting.
Because Carlo, the truth is that we really need to start from somewhere. And the truth of the matter is that we have to start with what we have. I wish we can all be successful, but the reality about life is that we have to sow seeds for us to have a better future. And if we don't sow with what we start from, we will leave things by. So to say the whole gist, I think starting from our own market is a no-brainer because it's easier. You learn so much habits over time. You can migrate. Many of us that trade foreign markets, we started from Nigerian stock market. You can migrate. Also, it gives you exposure to understand the companies, their balance statement. You see some people talking about GT. They don't even know how GT makes money. They don't know what makes GT different. They don't know why UBA is what this. They don't know why Access Bank is what this. Investing will teach you all those things over time. Then you get better, superior information because you relate to investment bankers. I have 6 different brokers. I talk to about a dozen investment bankers a week to get top information about what is happening. So I'm not just reading, I'm also getting top valuable information from insiders. And Nigerian investment bankers are not expensive, unlike Europeans. If you open a European standard account, for example, ask Carl, if you know how much financial wealth management fees, if you know how much they pay, you start with your advantage. So start with your advantage and don't be consistent. That's all. Thank you.
So in effect, you're saying, are you saying that if I'm a Nigerian guy in Nigeria just starting out, it's best for me to start with a Nigerian than going foreign, even if I could make more, I could hedge, just to be clear?
Carl, because the problem is that the acronym around the the thing around investment is that there's nothing like flawless. You're going to, at some point, lose money. You need to learn the ropes. It's just like someone who wants to learn a car. You start your driving lessons on the expressway. You might survive, but the chances of you surviving when you hear the horn of a trailer or you see different cars running at speed of 100 km per hour. But when you start on your street, someone say, no, I put this one, okay. You enter the bush, you enter the gutter. That's how we all started. That's how many people started to drive.
All right, gotcha.
If you nobody decides to drive on the expressway, that's the problem a lot of Nigerians need to realize.
Start slow. I hear you.
Carlo, actually pick the mic because I want to support Olumide.
No. Zero. Well, got to Toliberry, you got the floor, Toliberry.
Okay. Okay. I'm signing out. I just wanted to appreciate you and Mr. Olumide for an insightful conversation. Thank you.
Appreciate that. Just have a lot of fun on speaks. Appreciate that. Yeah, Toliberry, you got the floor. Thanks, Zero. Appreciate you.
Hi, Carlo. Good to join the space today.
Yeah, how you doing?
How you doing?
Very, very well.
Yeah, I requested for the mic when we were discussing, the store of value on Bitcoin, gold. I just want to share my perspective. If you had asked Satoshi Nakamoto 10 years ago if one Bitcoin is going to worth $70,000, I think he would have argued with you. Or if it's going to agree with you, he would have agreed that the world would be in a mess. So my point here is that these assets that we are mentioning, they are just on their own. It's the actions of the government, the policies of the government, the unending money printing, the low productivity globally, the low GDP. That's why these assets, add money, that's why they are going up. It's not really their own use case. But
give me an example of what's hard assets. Give me an example of a hard asset.
An hard asset is gold.
Okay.
There are characteristics of hard assets, right? They have to be relatively scarce. They need to be. It needs to be interchangeable. It's really the quality of the characteristics of money. So as much as those assets have those characteristics of money, they could be regarded as hard assets. Oil, people forget that oil is black gold, right? It's also hard money because everything we do in life is energy. And the best form of energy right now, perhaps owing to nuclear, is still oil. And it is limited. But my point is, based on known and unknowns, there are some things that we can predict right now. All central banks around the world are printing money, and they are never going to stop because they need liquidity in the system. They need to fund the government. Nigeria is not an exception. The US itself is not an exception. Now, when you know that already, you can extrapolate what the consequences of that is. It means that at some point, a lot of money will be chasing very few things. Now, let me say today, as of today, there are two very big problems in the world.
I want you to land this plane. Land the plane. There's a lot of food on. Just land the plane.
Yeah, I'm just going to land it this way. There are two major problems right now, and I think those problems will be exacerbated in the next 10 years. One is food scarcity. The other one is bad money. So I'll conclude by saying we could get to a future where only good money will buy you food. So regardless of, we keep looking at Bitcoin in terms of dollars, it's actually what you're going to exchange for in the future. So I'm just going to stop there. Thank you.
I mean, I get the point you're making, that in effect, food is we need food, but we don't need money. So in effect, if I export grain, I could say I want this particular currency to pay for my grain. I hear you. But you forget the fact that the government can basically invade another land and take all their food. Might is always right. And eventually, if you look at the strongest currencies, they always correlate with the strongest navy. You've already said government will keep printing and will never stop printing them, which is correct, which means that eventually what we call currency is whatever the strongest government says it is, not what we say it is.
I agree with you 100%. And that's where we need assets that the collateral is in your possession.
How can it be you if it's
gold
if
is in my possession, my Bitcoin is
how can gold and Bitcoin be in your possession when the government can say you should no longer hold gold or no longer hold Bitcoin? It's not your possession.
So in the US there's the Bill of Rights, and
the same US banned holding gold. The same US banned individuals holding gold.
They ask everyone to surrender gold. They didn't ban it.
They banned it. That's the whole idea now. They say surrender your gold. You cannot hold gold individually again. Which was breaking the law. But the point I'm making, sir, is this. The government says you can't hold gold. So eventually, whatever the government says money is what money is going to be. Like I mentioned John Law at the beginning of our space. John Law says the French government passed a token, and the French government then said this token is the only way you can use to pay your taxes. So a piece of paper, wasn't the French franc, but that piece of paper back then became the most valuable thing in France. Because no matter how much money you have, you had to exchange that for the government's paper to pay your bill, which is where this thing of legal tender comes from. The government can allow you to hold legal tender, but once the government says that you must pay your bills in Naira, whether you hold Bitcoin, you still have to convert to Naira.
I don't know the jurisdiction that you are, but I get your point. But as someone in the US, the US Constitution says no other state shall have anything else apart from gold and silver.
That is not true. It says legal tender. It doesn't say you can't hold
that
it.
Is what it is. It's
but
a legal tender.
Yeah, but legal.
You are breaching the US Constitution.
Legal tender means to pay debt. You can hold it, but you can't pay debt. So the US government has already in the past banned you from holding gold. Why can't they ban you tomorrow? I mean, remember a few years ago, they were already banning Bitcoin, just like Mr. Trump is saying going to allow Bitcoin. If the US government comes to them and says if you hold Bitcoin, it's a terrorist act, would you hold Bitcoin?
I wouldn't, because that's not in the Constitution. But for gold and silver, you'll be breaching the Constitution. If I'm going to agree with you, there's nothing I can own. There's nothing I can own that will ever be a store of value or an asset.
No, you are going too far. All I'm saying is that it's the government that will determine what currency is, not you. It can be, you can hold cows and your cows are valuable. I'm not disputing that your cows are valuable. I am saying the government says today that milk is currency. If you hold Bitcoin, you are broke. I'm not disputing the fact that your Bitcoin or your currency or your gold. If government says to you that gold is not valuable, then what do? After God na government. US, Nigeria, everywhere. After God na government. So I'm just making a point that in the end we have to. That's why you have. I don't know. We're going to far places. Yeah.
Okay. Let me counter it this way. If I'm going to agree with your point, then nothing else can be a currency.
The dollar you are holding is a piece of paper. The currency you hold today is a piece of paper. Yeah, the only reason why it is valuable is because the US government stamped it US government. It has no value whatsoever. This is the point I'm making. Bitcoin is a far superior thing than paper currency. I'm agreeing with you, but I'm saying because you are not the government, you cannot wake up and say Bitcoin, because it's far superior, we'll have to use Bitcoin. It doesn't work that way. The government is slow, the government is an ass, but they are the government. They will determine what you do. If they wake up today, don't you watch Walking Dead? I'm a Walking Dead fan. Have you seen Walking Dead, where the whole world was full of zombies? What's the currency on Walking Dead? Bullets. It's not even gold, it's not Bitcoin, it's bullets, because there is no more government. So you need bullets to protect yourself. That's their currency. So eventually, when society breaks down, people say, "Oh, when government breaks down, I'll hold my Bitcoin." No, when government breaks down, there's no law and order. So even your gold will be worthless. What will have value is going to be water, bullets, and chewing gum. That's it, not gold. So I want to get the point out.
Really apocalyptic
Exactly.
situation.
If there is no government, there is no currency. Even the gold and the Bitcoin will be worthless because the government makes the currency itself, makes the economy function. So if you take that away, then you can say you remove fiat and replace with Bitcoin. So you remove government and replace it with private sector. How about? It's not possible. Let's get. Let's move on. Let's get Doki. Is it Doki Capital? Thanks, Tolu. I appreciate you.
Thanks so much, sir. Thanks, Olumide. I've been following you guys for the past couple of years. It's always nice to be part of you guys. I love what you do, Olumide. You are always on point. I mean, you get your insights, and I know because I'm also doing the same. I try to also get my information from inside as well. I have almost 5 brokerage just like you. I love investing in Nigerian markets. I love it because it's so easy. I mean, I just enjoy it. I enjoy American markets as well. I'm exposed to South African markets as well. So my question is, what are the companies that I've been following couple of the companies in Nigeria that are actually into tech, the tech companies in Nigeria, company like CWG, eTransact, companies like because I'm looking at the AI revolution that is coming, and I think Nigeria can actually benefit from it since it's one of the black nation, the biggest black nation on earth. Actually, we haven't really done anything to actually bring the youth actually into that yet. But if we as an investor can actually see that before it happened, that's why I'm actually asking this question, saying, what do you guys think about Nigeria actually also capturing some part of that AI revolution when it comes to African market?
Olumide, tell him your refrigerator statistics, please.
But good question. If you look at the stocks, the technology stocks on the NGX, you see that they are fairly profitable. But you need to also look at the characteristics between Nigerian investors and American investors. You know, America has the largest amount of listed tech companies, the most profitable, biggest. But the truth of the matter is that they have different temperaments. We have growth, most apart from the Apple, the Microsoft, the Magnificent Seven, and other systemic tech companies. Many tech companies are growth, meaning that they are really after growth than profitability. But if you look at that in Nigerian stock market, it's a different ballgame entirely. Nigerian investors will want you if you are not profitable. That was why I was laughing when someone was saying that you can just list a stock and Nigerians are very sensitive to profitability. Don't try that. If your business is not profitable or on the path of profitability and you list on the stock market, I can tell you for free, you get hot. You know. So if you look at what those guys are doing, they are focusing on business to business, government. Look at what Charms in the ID space, payment space, eTransact. The fact that Access Bank has exposure in eTransact. So yeah, I agree with you that there are opportunities, but the reality is that Nigerian listed companies are more realistic than the ones you see outside. You see all these fintech companies, you see what's happening to them now. The bubble is busting. Apart from a few ones like Piggyverse, Paystack, Futawave, you can see the real scenario in that space. So we haven't seen that in listed companies, and why? Because they cut their costs according to their size, they chase profitability, efficiency, they reduce debt. So yes, the president minister is trying to promote these things. But you see, the other concerns we have is that Nigerian listed companies are not rewarded. Despite the fact these guys open their books, they list on the stock market. How many of them are really exposed to direct government contracts? That's the problem. That's the problem we are facing. And until we start rewarding efficiency, people that are productive ahead of people that know somebody, nepotism. Because if you look at tech contracts in federal government deals, because I've tried to chase, you already see Charms, CWG. Until recently, I saw CWG working with the military. I was kind of excited. Was CW one systemic? I was kind of excited, and what Access is doing with e-Transact. I think people need to watch that space. Because a lot of people don't understand that Access has a physical exposure. So I think over time, the NGX will evolve. But the right thing is that because tech works with liquidity, America is going to be America not because of liquidity alone. There's a culture of risk, there's a culture of research, there's a culture of development. Nigeria, we don't have those things.
So we don't have that.
Yeah, so it's really, really tight. So for me, I think conservatively, I think you just need to be very realistic with your tech exposure in Nigeria.
What are your top 3 or top 2 picks in the tech space for just a guy that wants to get exposure? Is it going to be like the MTNs, or is it going to be more others that you have in there?
I don't understand. You mean the stocks or the areas?
Like your stocks. Like, what stocks are you looking at in terms of top deals?
I don't want to mention, but so generally, like I said, I have exposure in different entities for investment. So I'm not soliciting. But if you look at me, when there was this fintech bank, I knew fintechs. Not that I underrated them, but I knew that they did not have what it took, because I look at distribution capability, I look at the capital base, and I look at the ability to leverage. If you look at MTN, despite the fact MTN created record loss because of FX gain, they are penetrating in the fintech space gradually, and it's becoming kind of systemic. If you look at how First Bank did with agency banking, First Money, MTN is trying to capture the segment where Nigerian banks are really kind of not really. I'm talking of the northern part of the country. So I think MTN really has good prospect. But if you look generally, I think I'm increasing my exposure in those tech companies I mentioned and Nigerian banks. The reason why I'm increasing, look at GT for example. GT's Abari Pay from inception has been profitable. A lot of people say, what does Abari Pay? Because they don't deal with retail, they deal with merchants and institutional clients. So these are kind of exposures I'm really looking at. I'm looking at businesses that can leverage on the number of customers, the capital is there, and the risk to mess up, especially in an unstable climate like economic climate like Nigeria. So
let me also ask you. I saw, again, just to go back to FCMB, I saw they're using AI to approve loans. Like, you can apply for a civil servant, you can apply for a loan and get an answer in like 24 hours.
Yeah, good question. FCMB, Sterling, Wema, these banks are something you need to watch out when it talks of when it comes to tech exposure. Sterling, for example, Sulaiman, a lot of people don't know that he's a man from Accenture that really was the founding fathers of InterSwitch. So you look at Sterling Bank's products, spot on. I look at the price right now because I think this year is one of the worst performing. At some point, it was looking like it was going to 6 naira. Now it's floating around the 4 naira mark. FCMB, very interesting stock. Is it a stock that definitely is a stock I hold? I'm looking at the upside because Yemi Siedu, she has really been able to trigger different sectors, and she's pretty unique around what you are really talking about, using technology to draw in the young population and particularly women. She's building products around women, female entrepreneurs. You see, I mentioned exposure to export capability. So yeah, FTMP is an interesting thing. But you see, the question is that you really need to know what you're looking for. If you're looking for long-term returns, definitely the tier 1 banks seem to say. If you're looking for larger but risky, of course, the tier 2 banks will come in play. Then if you're looking to capture the bigger market well, when MTN was dropping below 180 naira, it was really, really a good buy. But right now, MTN seems to be looking to break above the 200. So it looks like your investment objective, the price entry, your liquidity, your exit really make up all these decisions. So it's not just about looking at the market.
Interesting.
It all depends on.
Thank you, Olumide.
Yeah.
So
real quick, we're gonna move on.
So,
go get us to
my
answer.
last question is: do you think there can be any tech company in Nigeria that can pull the stunts that some companies in America are pulling right now, in sense of saying they are changing the strategies of their reserve asset?
To be honest with you, I don't think so. As I've said, just like Carl have said, and that's where I have issues with many crypto fans here or fanatics. We are not realistic. The Nigerian political space is not supportive of crypto assets. Let's face reality. When we face the reality, we're able to defeat our enemy. The truth is that some CEOs, some top business entrepreneurs, they are receptive towards crypto, but the establishment from the National Assembly to those in the corridors of power, they have high skepticism around crypto assets. You've seen that it's not just Buhari, it's not just Emefiele, it's not just, despite the fact that you see that there's a cloud around it. Until we fight that battle, I don't see it happening in the next few years.
Thank you.
Gotcha. Let's get King. Mr. King. Guys, we're going to get everyone to speak, not to worry. We're shutting down once everyone is on the session now speaks. So, King, go ahead, sir.
All right, thank you very much. Carlo, I'm very grateful for the opportunity to speak. Olumide, I've been speaking right on point and I've been writing down. Trust me, there's no ending the pursuit of knowledge. And I've really been, taking down so many things. One thing I always talk about, by the grace of God, I also have exposure to the foreign market. But talking about the Nigerian market, I always see Nigerian market from the standpoint of the early days of crypto. The truth is, on the long term, over time, Nigerian stock market is almost like free money, bound to go up if you know the right stock to engage in. If you look at the agriculture sector, the truth is, it is booming. You could see Dangote here and there and the whole lot of it. You could look at the banking sector, though they are having some little relapse because of capitulation and the whole lot of it. But that is even a better pullback for them to go on. So, first of all, whenever persons get to ask the question of, a lot of it. Can you guys hear me, please?
Yes, but can you go to the question just so we can get us in? Go straight to your question, sir.
All right, very well. So, before now, the question I wanted to ask, and I'm particular to Mr. Carlo, please. In all humility, I ask this question. Please, I don't know if you could do us the benefit. Okay, let me not say us though, but me precisely, the benefit of talking about the place. I know you might not really be 100% open with it, but you do us a little bit of honor by talking about where you get your information, because most times I'm actually lagging in terms of getting information, and before I get to see them, it's early on your wall, and most of the times I get first-hand information from your wall. So I don't want to know. I want to know rather, where do you get your information from? I'm not supposed to be asking, I know.
The internet.
The internet is very, very broad. Indeed. It's very, very broad. That is why I'm trying as much as possible for you. If you could do us the benefit of streamlining.
No, I go to many. It's just that I'm focused on it. Really, it's nothing magic. It's just focused. If you're focused on knowing the scores of Chelsea, Man City game, you'll get it. I do a lot of outlets. So on my phone, on my watch, when I read, I get a lot of news headlines. So if you want to just know what's happening, just subscribe to these news channels and read newspapers and read the details, not just the headline, but the details, and you see lots of threads you can pull and get information from. There's nothing magical about it. Just if you want to, you get it.
All right. And I think that will be also, I could also give persons the opportunity to speak. So thank you very much. I'm
Excellent,
very,
sir.
very grateful for having me on.
Appreciate you calling in, sir. Appreciate that. Let's get Micah. Micah, Micah.
Good evening, everyone. Can you hear me?
Yes, I can.
Yeah, thank you so much, Carlo, for all you do, and thanks to Olamide as well. So quick one. My question is, I heard Olamide talk about in the Nigerian stock market that you can't lose. I think he said more than 10% or thereabouts.
Yeah.
Which I actually find quite interesting, right? So I bought this stock, VFD. And I bought it around when it was trading at 202 naira. And then all of a sudden, I think they had a stock split or thereabout, and the stock price fell to 40 naira per share, right? And then my money, I think I invested like 200 or 300k, and it went down to like 65,000 naira. I was like, what's happening? So I had to do some digging. I found out this 10% stock. So I was like, why would the price of my stock go down to 65k when they had a stock split and my money is supposed to be issued around that same range? Even when it was trading at 40 naira, I believe the thing went up to like 60 naira or thereabouts. So I was like, I reached out to my stockbroker because I used AfroInvest and I didn't get any response from them. Then I had to even ask the CEO of VFD, which is I've forgotten his name. Opala. I've forgotten also Opala, yes. And he was like saying that the PR or something about it was going to say they are still on it. And this is like almost a month, and my 300k or my 200k is 65k. So it's so bad, right? It's so bad. So I see you guys like talk about the Nigerian stock market. I'm actually like a huge fan of encouraging people to invest in the Nigerian stock market. But at the end of the day, you see that there is lack of efficiency. Some of these stockbrokers are they are so bad. Like their service is so bad and so poor. I try to manage AfroInvest because I feel that they are the only ones that is a little bit digital. But the rest of them are so poor. When you try signing up, it's either their service server is down. So like, why do you guys keep talking about the Nigerian stock market when at the end of the day these guys are not even efficient enough? At some point, let's think about maybe on the long run, even opening my own stockbook and see if I can change things up, that kind of thing.
That's an option.
I'm asking.
That's an option.
Yeah.
So, but to go to your first question, so Olumide was making a point that when you have the market can decline to a certain percentage to a floor. So, like it can decline day by day by that 10%. That's what he's saying. So, if a share price is falling, once it falls by 10, that's where it falls for the day.
Okay, that makes sense.
But overall, if you invest in a good asset class, remember the value and the price are two different things, right? If you buy a company that's got good value, the price will keep on changing. The price is based on demand and supply, but the value is based on earnings, future earnings. So you could have a good company that during Christmas, people are selling their shares to go for Christmas or to pay for school fees. So the price will fall and the share price will lose price. The share price will depreciate, right? But the value hasn't changed. So you want to ask yourself, is my share price falling because there's a demand and selling pressure? Or is it because the fundamental earning capacity of that company has changed? Look at it this way. Let's pick, what company can we pick that's going to be Dangote Refinery? Let's say Dangote Refinery was on an established company. Let's do a good example. Let's say that we had NNPC and now we have Dangote Refinery. If NNPC was a listed company, the share price of NNPC will go down because of Dangote. Why? Because now there's competition to refining local crude in Nigeria. So the future earnings of NNPC will reduce because there's now Dangote Refinery. So that reduction in price is not the share price falling per se. It is the company's price, the market pricing the share price to its real price that reflects its future earnings. You see? But what if there was no Dangote Refinery, but a distillation plant in NNPC went out of commission for say 2 months? The share price will also fall because of that short-term disruption in earnings. But it's not going to affect the future earnings to that extent. So the market will say, yes, we are going to factor in this fall in short-term earnings, but long-term, the future earnings of NNPC, because this decision plant will not really change in the long term. You see the difference now. So the pricing reflects how the market looks at the earnings. So you coming back to your question. If you bought that particular stock and the share price has gone down, did the share price go down because something happened to the projected future earnings? That's what you want to ask yourself. Share price is not guaranteed to go up 100%. It's only guaranteed to match with earnings. So if you do your research and you find out, I heard you asking people, oh, PE just reflects the earnings ratio, how much investors want to pay today for future earnings. So if you see a PE of 4, it means investors want to pay today 4 times the earnings to buy the stock today. So it reflects to you a growing demand. So a PE of 100 and a PE of 10, the PE tells you how expensive the stock is, not the share price. So if you see two companies, both are worth 10 naira, but one has a PE of 100, it means that you are buying 100 times the earnings at the share price of 10 today. So that means that you are expecting, like Tesla, you are saying that the Tesla share price is going to rise so much in future that you are willing to pay 100 times today to buy that share price today. So you've got to do your own research and find out. Ask your broker, what is driving the earnings? And do your own research. How does a company make money? If you know how the company makes money, then find out, has that been affected by any government regulation, by competition, by anything. That then ask yourself, is it going to be a short term? Is it going to be a long term? If it's short term, make a decision. If it's long term, then sit still and ride the wave. Yeah.
Can I comment, please? Do you mind? If you don't mind. So what affected their stock price was not like any news. Like I think they had a stock split, right? So the price of their share came down, but they offered more shares. If
it's a stock split, I heard you say at the beginning, but I thought if it's a stock split, there's no change at all. You had 10 shares at 100. Now you have 20 shares at 50. There's no change.
Yeah, but what I'm saying is, what I'm telling you that in my account, the price didn't go down. I don't know if you understand. I reached out to the CEO. Thank God the CEO actually replied my tweet. So he was like saying that they are still on it. Like they are yet to like assign the share value.
It has nothing to do with the CEO. It's the stock market. So once they do a stock split, and the stock split has occurred, it has nothing to do with the company. Yeah, it just happens. Your stock price would fall, but your number of units would go up. So what you are asking me on your CSCS, you want to get those, maybe your CSCS or a physical certificate. You want to find out from the company what's going to happen. But stock splits are not a fall in price. It's the market pricing in the cut in capitalization. It's not the same thing as the company's earnings fall. No, this is just the company is trying to make its share price cheaper for investors to buy or pay you a dividend. Yeah, that's really what's happening there.
This problem is just that they've not accounts. That's just problem.
Exactly. It's your account. It's not the stock per se. Yeah.
And also, I think a lot of people need to understand that the Nigerian stock market has unique fundamentals. So let me give you a good example. Zeblat. I bought Zeblat 337 around COVID. And the reason I bought Zeblat was because it was a company that had big trust. I looked at the management team, and this was a company that had the audacity to also list on the London Stock Exchange. I know they were not jokers. And I also wanted to understand the upstream business. But look at it now. Zeblat has risen to 4,000 naira. Yes, I sold of my exposure, but I still won't say that. But what I'm trying to say is that even if we look at valuation, inflation, Zeblat investors in 2020 have not done badly because the stock from that point to this time has done 10x. When I mean 10x, it has done over 1,000%. You know, look at the currency at that time, the dollar, you can't say the currency has depreciated 8,000. So you also need to look at fundamentals of the stock. Very, very important. Price earnings any per share is good. But the thing about Nigerian stock I found out is that investors are fundamentally driven than the technical.
Yeah. Olumide, good point there, Olumide. Thanks. Look, so we're going to wind up in the next 10 minutes, guys. Let's get the guys that are still here that haven't spoken. Let's get SCHI. I can't pronounce that name. SCHI. Then we'll get ready. Then we'll get official, and then we'll get Dr. EU, and then of course we'll get AC Chikelu, and then we'll sort of right now. XG. Is that you?
Yes, I'm here.
Yeah, go ahead. What's up?
Good evening, everyone. Quick one. If someone, for example, has some amount of money and doesn't know what to invest in, maybe I'm asking if I can invest in treasury bills or mutual funds, which would be a better option.
Let me ask you a question. If I want to buy a car, which car should I buy?
I'm a bit confused because it's just like someone retiring and getting this amount, X amount, and you cannot just go and if you leave it with yourself, you can waste it, spend it.
I know. I'm asking you that if I want to buy a car, which car should I buy?
You have to have specifics. What you reasons for buying the car? What
excellent
uses you have for the car?
Excellent answer. So the same thing, right? If you have money, right, you want to have specific why you are investing, how long you are investing, and why you want to invest. Those answers will tell you should you buy a treasury bill or should you buy a stock. So look at it this way, right? If you are going to invest for more than 1 year, then you can buy stocks. If you are going to want your principal back, whatever happens, less than 1 year, you should not buy stocks at all. So these are like rules of the road, right? So if I ask you, how old are you? Let me ask you the question, when would you want your principal back? Not the returns, your principal, when do you want it back?
Say a year or two.
Okay, a year or two.
Some time to, yes.
A year or two is letting me think that you want your fixed income back. You don't want wahala. You just want your money back to you. Whatever happens, 1 year, 2 years, you want that money back. Is that correct? You don't want to hear I'm coming, Abi?
I think that's why I'm asking for treasury bills or mutual funds, something to have some time to.
I'm answering your question. I'm answering your question. So again, the mutual funds can buy a treasury bill. So you're asking, like, I don't want to use the wrong language. Your question is kind of, I'm not trying to be disrespectful, funny, right? Because the mutual fund can buy a treasury bill. What you're asking is what type of fixed income should you buy? Let me give you the answer. If you want to invest for less than 3 months, you can buy a treasury bill for less than 3 months. But the problem is that you don't have the capital to buy it directly. So you want to buy a money market mutual fund, which is your question. So when you buy the money market mutual fund, the money market mutual funds buys treasury bills, it buys bonds, it buys lots of fixed income, but it sells it to you at a retail basis. So you are able to invest in that money market mutual fund and buy that and get exposure to treasury bills. If you want your money back and you can wait for 2 years, you can buy the federal government treasury bill. That one pays about 17%. It pays to you quarterly. So it's safe and it pays you the money quarterly. But the mutual fund, it's easier. Like, you can go in, you can come out, and it's retail. Nigerian mutual funds the federal government ones are 5,000 naira minimum to buy. I don't know how much you have to want to invest, but the money mutual fund is okay for you because those guys will buy the treasury bills, and then you can buy the money market that invest in treasury bills. That's basically okay for you. Ask them if the return is fixed. I don't think it is. I think it fluctuates because it's a mutual fund, but the federal government savings bonds, the rates are fixed. So you want to clarify those two from your money market mutual fund or from the federal government bond, which you can buy from a bank or a stockbroker. Does that answer your question?
Okay, thank you.
Yeah.
If someone wants to read now about investing, what books would you
if you go
apart from yours?
yeah
I can get.
yeah
What
sure,
books would you recommend?
if you do hashtag FinPlan Books, as FINPLAN books, you see lots of books that I've curated on investing. Very, very easy books. FinPlan Books, hashtag FinPlan Books. It just gives you tons of books there. And they are very, very books that are easy to read and all that. Yeah. Good website for you, Motley Fool, MOTLEYFOOL. Motley Fool is very, very good. Investopedia is very, very good. You can subscribe to receive daily financial terminologies and you can understand what they mean. It's a very, very easy site to go to and read. That's Investopedia. Motley Fool is very, very good. ProShare, I love ProShare. The handle is Nigerian. Very, very good. You can go there. They give you lots of broken down stuff as well. I think also on handles you can follow. What's her name? Or sign it. See, I'm going to send you Twitter handles. Olivia, can you post? There's Tosin's site, Money Africa. Money Africa is very, very good. Just Google at Money Africa. There's also Shade that does smart women investors. These are very, very good sites for you as well that you can follow. They're Nigerian, so they can talk in that part with it for you. Money Africa does courses you can pay for and learn about finance. So yeah. If you DM me, I can send you all the handles. Just DM me, I'll send you. Or if after the space, I'll post it. Just at me after the post, and I'll send out the handles to you as well. Yeah, at me after the space. Yeah. Okay. Is it Chico?
Thank you.
You're welcome.
Sorry, Carlo, can I ask you a quick question, please?
Okay.
Please.
Go ahead.
Just a quick one.
Yeah, go ahead.
Okay, so the question I have is going back to this dollar.
Hold on. Yeah, real quick.
So going back to these dollar bonds.
Not you. Please, ready? Just hold on. Oxley, please be very, very quick, please.
Okay, so going back to these dollar bonds and treasury bills that the federal government is trying to float. So my question is, would they floating them? Would they still follow the SEC rules, or is it a case of the way they handle their naira treasury bills as we speak, where the commercial banks are used as the collecting banks? Once the commercial banks get consolidate all the cash, they move it to the central bank, and there will be no fund manager, there will be no custodian bank. So I'm asking this question because given that the currency is not the Nigerian currency, I'm worried that in a situation where there is no custodian, there is no, maybe the federal government will be their own fund managers.
No, it will have the same. It will have the same rules. It will have the same issuing house, the same rules. It's just different currency. Yeah, no change. Just the same different currency, but the same stuff. Yeah. That's an easy answer for you. Yeah. All right. Reddy was speaking. Also, it's the same guidelines, custodian, issuing house, the same thing, just different currency. Yeah. There's actually an issuing house and all that. Yeah. So Reddy, go ahead, sir. Reddy, go ahead.
Yeah, Olumide and Carlo, thank you very much for all you guys do for the Nigerian environment, the level of literacy you guys have passed. Let me go straight to the question. I converted most of my money as savings. I converted into dollars, and I'm keeping them as dollars as well. And you know how safe that is. So I now said, okay, another option, instead of just keeping it as dollars, let me buy gold, solid gold per se, and that's still unsafe. Is there any way you guys can advise me on how I can invest in gold without really having the physical gold? I'm in Nigeria, so that you understand what I mean. How I can invest in gold without having the solid gold.
You have to invest in the. Yeah, great question. You have to invest in the security. So if you just Google online, I don't know if in Nigeria there are certain apps that allow you to invest in foreign issued securities. I think there are SEC approved apps. I know there's Bamboo. I know there's Cowrywise. I know there's Shaka. So you have to invest in a foreign denominated security. The only Nigerian one I know used to be, what's the name of that? Is it New Gold ETF? But it's overpriced now. I think it's New Gold ETF. That was the Nigerian. It's over.
Yeah,
we also have Japan. In fact, Japan is exposed. Yes, is exposed to gold mines, and that was why the stock at some point blew. So indirectly, that's
is Japan still the same Japan guy? Still that same guy?
They divested from oil and.
But it's still the same guy. Still the same guy.
Yeah, they're still the same.
Okay, I don't know about that. But if you want to do Nigerian issue, is that new gold? But that one is very expensive. If you want to invest abroad, just Google gold ETFs. There are many of them. Google gold ETFs, and you can invest in that ETF. It buys the gold itself, so you don't have to hold the physical gold. That's just the way you want to do it. Yeah.
My problem with many people is that for those that go to invest, you have to have tangible amount of liquidity for you to really meet your risk. So, for example, are you going to use the stress to invest $100 by the time the management fee, transaction fee, what are you going to get at the end of the day? So your level of liquidity also matter.
It's like 2,000, Abi. $2,000, $2,300 for gold bar now per ton, Abi. That's what I'm buying.
You go to 2,500. What was the Friday? 2,500 per ounce. That's like 20 grams. Yeah.
I mean, mining stocks. If you buy the ETF, so you can buy and sell if it goes up. There's a big. I think it's Belcram. Jesus, man, this ETF. You can buy GGG. That's the community that it doesn't buy just gold alone. It buys all commodities. Or you can buy gold directly. If you just Google gold ETFs, it will give you a ton of them. Belkin Gold, many of them are there, very, very liquid. You can buy that if you want. That's just the way you want to do it. If you don't want to hold the physical gold per se, it's actually a better way, in my view, than holding the physical gold. Where are you going to sell the physical gold? You have to go to how do you sell the physical gold. But if you hold the digital gold, you can sell. The problem is that many of these gold ETFs don't actually hold gold. It's all a synthetic. But I still think it's a better way for you. All right, guys, last few questions. We've got Isechiku and we've got Dr. EU, and then we'll call today an official. Isechiku, hi. Go ahead.
Hey, hi, Carlo. Well done. Actually, Carlo, why I picked up the mic, I have a question, but I wanted to support what Olumide was saying, and I wanted to share just a few things, my experience in Nigerian market and markets, across the world. For someone asking a question if he should invest in Nigeria or look outside, and Olumide, I want you to chime in here and tell me what you think. For me, why I cannot enjoy Nigerian market is how the market reacts. Nigerian market is lazy when it comes to reaction to information. So in the US, if something happens now, stock market, as long as the market is open, even when the market is closed, stock market will react immediately. You will see it. Like if American president says something, or the Fed president says something in the next 10 seconds, not even up to 1 minute, the market will react. Something would happen in Nigeria that should affect a sector. It will take 3 days, 2 days, at times 1 week before the market reacts. That means Nigeria is safer if you keep your ears open, if you know what is happening. Once you hear it happen, you can actually react before the entire market does it. I'll give you an example. But you said something about Japan. Sorry to say this, I'm not going to put my money in Japan anymore. But when Japan signed the contract to move from shipping line to gold, it came up, I think it was on Nairametrics or something. I had that conversation with one of my friends. The next day, we went in big on Japan. In fact, we went in at 25. I went in at my average of 25 kobo. A few months down the line, Japan hit about 1 naira 20 kobo. Like, we all smiled. But people did not react for like 1 week. And at some point, someone was thinking, are you sure this was going to happen? But we are like, look at it. The Chinese firm bought it. We analyze the risk. We are going to go in. So you're a bit safer going into Nigeria. This is my opinion, right? You're a bit safer going into Nigeria because Nigerian market doesn't react that quickly compared to foreign markets. That's one. Two. Were you going to say something, Carlo?
No.
Okay. the money markets, I would say this, and Carlo, I want to hear your opinion, right? Me and my friends, we are smiling better in Nigerian money markets than in American money markets currently. So I play with FSDH. FSDH is super good for someone asking about technology. FSDH has gone, you wouldn't believe it, when you sign up with them. I'm not marketing for them, I don't work with them, they're just my broker, right? So
you say you smile more with the Nigerian fixed income than the American one? Just want to clarify that.
Now, for the past 3 months.
With the Nigerian ones?
If not more. So the money market has been above 20% in Nigeria, FXCH specifically. Some other people TTR between 19%, 18%. But almost all of them are all above. When you look at ICO, you look at Stanbic BTC and all that, they are all above 20% now. In fact, for the past 1 month, they've been above 20%, right? So the money I have, if you put money in America or in Europe, UK to be precise, right? Chase Bank will give you about 4.1%, 5% in America. In Nigeria, you're getting 22%. Even with the volatility, even with the devaluation of the currency. So we crunch the numbers and we go, even if it hits 2,000 naira to a dollar, you are still way better than having it outside Nigeria. This is my personal opinion. I'm not saying you should do it, but this is my personal opinion.
There's two things. Let me just quickly hop in because we have to just round down if you don't mind.
Yeah.
So the first one, when you say the market reacts, that's actually an advantage. And Nigeria does not react; it's an advantage.
Yes, that's why. Sorry. I'm directing I was directing my opinion to the guy that was asking a question. So for him to be safe, so if you want to exit, if you hear something that you feel is going to affect the market, you want to exit and take your money, with your profits. In Nigeria, you can easily do it the next day.
It depends on the liquidity, right? That's the thing I'm going to like. The U.S. market is more liquid. In Nigeria, you might want to sell. No, you might want to sell and not find a buyer. And you can look at the volume. So I'm just giving you facts, man. Look at the volume. If you look at Nigerian stocks, you see a volume at the far end of the table chart. Look at the volume. Sometimes it's very, very little. So you see the price movement will go up 100%, but volume has gone up by 10%. Which tells you the price is just one guy moving the price up. But in the US, it's hard to find one or two guys. And I'm giving you for experience. You can move up the price in Nigeria, one guy, but it's difficult like the US. But the second point about the 20% and the 4% is 4% dollar, 20% naira. It's not the same thing.
Know.
So
I know.
Yeah.
We front the numbers. I don't want. Me and you, maybe we can talk on private.
Yeah, I get it, but it's very important. Yeah, it's very important to understand that it's different thing entirely. I mean, a currency, you've got to be able to hedge for a longer time. I don't see the dollar losing 10% in a week or 5% in a week, and the naira did that. So keep that in perspective.
I'm going to give you an example. I'm not speaking out of thin air. I'm speaking out of what I'm doing. So you know. So if you put $10 in your US, right, and you convert that $10 and put it in Nigeria money market, right? At the end of the month, you crunch your numbers. You will be almost over 40 or 30%.
But you've got to go back to dollar. You've got to go back to dollar.
No. Yes. Even when going back to dollar. Carlo, this is practical. This is not theory.
No, it doesn't work. No, bro. If that worked, right? See what I'm trying to.
I'll send you some screenshots.
No, hold on.
I'll send you some screenshots.
No, we're not arguing. I'm not. What I'm just trying to tell you. Don't be very. See, if this was what you're saying, you are talking about a very, very volatile market. This will have to pull at the very, very beginning of the year.
Higher the risk, the higher the risk, the higher the reward.
That is not a factual statement. And the point I'm making is that if you say people should change dollar to naira, Yes, one time. Look at the carry trade just collapsed 2 weeks ago. The whole market in the whole world crashed because of exactly what you are saying. It's a carry trade. You are borrowing from America to invest in Nigeria, then to convert back to America. That's a carry trade. And I'm saying is yes, you make money, but put the risks out there and say if you do this.
I know some people that borrowed from Japan.
I'm not debating that this strategy cannot work. I'm just giving the risk to folks that are listening that listen, if you do this, you are carrying the risk that when you want to go back to your dollar, the naira might have moved and there's no profit anymore. It's not a guaranteed strategy to borrow in a dollar and invest in naira and then go back to dollar. That's why Nigeria had to increase interest rate to entice people to do what you're saying. So the guys
let
are doing what
let me be as a bit clear as I can. I'm not saying somebody should borrow. We did not borrow.
Yeah, if you're not borrowing, it's not
yes,
that is not
exactly.
Which is what I'm
so I'm not saying people should borrow, but I've seen people that borrowed. I've seen people that borrowed money from. I got money from Japan, which is low below even before they pushed their NPR up, and they brought the money back to Nigeria.
All right. We got to go. I mean, again, it's all about investing and taking risks. The point I'm just trying to clarify. I'm not saying if you I earlier said if you take money from your HELOC and you buy a federal government bond, I said the same thing you are saying. But I'm just trying to put the guardrails there to say, listen, if you do this, remember the risk is to go from naira back to dollar. That's the risk. Naira back to dollar. That's why we had the FX market in Nigeria that allow you to hedge that position while you held it. The guys that have bought CBN bonds, CBN has given them a swap. So when they buy, at the end of the tenure, they're going to get back their money back at a guaranteed rate. If you do this, fine. You can take dollar at 1-2%, buy Nigerian fixed income at 30%, which is what the CBN wants you to do. They want you to bring your dollars from America to Nigeria. So they get an inflow of dollars. When they get the inflow of dollars, they are going to pay you that 20%. That's what they want you to do. Then, at the end of the year, would you go back at 20? That's now we don't know that, right? But this is what Nigeria wants you to do. So I hear you. We just have to.
I was gonna ask a little bit. I was gonna ask a little bit question, right? But before I answer that question, I'm gonna say something to you. When we talk about liquidity in Nigerian market, right? It depends on who you play with, right? FSTH and some other brokers will actually give you exposure, will actually give you visibility for you to know the level of bidding and the level of offer on a stock. So worst case scenario, you can cut 2% down and take your money and go.
You get it everywhere. Everywhere gives it to you. Any broker, the daily report of the stock exchange, go to your broker and ask for it.
No, I mean live. I mean live.
You can get it from anybody. Just ask your broker, I want to see the live bid offer. They should give. If you're a big boy, they should give it to you. Ask them. It's not hidden information.
Yeah. So,
all right. So we gotta go. We gotta roll.
Yeah. Carlo, my question to Olumide is: do we have any policy or some form of circuit breaker in the Nigerian market? Because you see what happened with Nvidia, right? Nvidia just went.
Is it we have? If that's a question, we have circuit breakers.
Yes.
Yeah.
So do we have people pinning that will say, for instance, Japan will not go beyond?
No. We have circuit breakers. I gotta move on. I gotta literally move on. I'm on a transit. Yes, we have circuit breakers. Yes, we have circuit breakers. We don't have market makers, but we have circuit breakers, which means if the stock falls below a certain price, it's kicked off the. You don't trade on that stock. Yes, we do that. And let me do it very, very quickly. Okay, I promised them to speak. Dr. EU, let's go there. Dr. EU, gonna be our last guy. Sorry.
Hi everyone. Thanks for the opportunity, Carlo. It's a pleasure being here. I wanted to share my views and ask some questions, but I think I'll just go straight to the questions since you're in a hurry. My first question is around the NGX, the Nigeria Stock Exchange. Is there an equivalent for the US SP 500 index? I don't have much knowledge about stocks.
They have a few. They have, if you go online to the NGX, look at the market. They have this. You see, there's IBTC 40. There are lots of them. There's Meristem. Lots of folks have created indexes.
Well, I think what he means about the
He's asking about like curated like funds and all that.
Yeah, like the top, like
they have. There's Vetiva. Vetiva has. Meristem has. IBTC has. The Standard Board has. Yeah.
But the indicator is NGX30. So if you look at standard Stanbic Bank, you see Stanbic IBCT30. You see Vetiva.
You can pick those ones, correct? Yeah.
That is where you get more than about half of the market cap. So it's a very good indicator, and most of them are on the pension index. So it's a very high. People see high liquidity, more efficiency, and easy price discovery than other stocks. That's why a lot of investors look at that too.
Yep. Does that answer your question, sir?
Yeah, that's very helpful. I think Kalu, I will DM you as well. There was this the participant asked the question earlier about investment, financial literacy and understanding.
Yeah, send it to me. I'll respond to him. Just at me, don't DM. Just at me. I'll respond with all those handles I mentioned, the books, the handles. I'll mention all of them. In Nigeria, they can get financial education in Nigeria. I'll do a separate tweet on that so you can have it all. All Nigerian people that you can easily communicate with and all that kind of stuff. Yes, I will do that.
Lastly, there's this rumor going around. Not say rumor. It's been mentioned that the FGN saving bond, the coupon, there was a delay in the payment. I don't know if it's. I've gone through the news. I've not found anything around it. But these are from people that invest in it, and they were mentioning there was a delay in it. I just wanted to check with.
If it's a delay, I don't think it's an issue. Maybe it's a delay one day, perhaps. Maybe the issue in house, but overall they pay on time. They have a costume and they pay on time. No problems with those guys. Yeah, that's the safest investment in Nigeria. That's why the returns are lower, but it's a very, very safe investment. No problem with that stuff. Yeah.
I will receive payments on Thursday and Friday.
Oh, you got yours?
Yeah. I got
Excellent.
I don't know.
Yeah.
So
perfect.
That's where I do.
Perfect. All right, folks. I do apologize.
For myself, yeah.
I got you. All right, I do apologize, guys. I'm like on a transit. I came for a wedding, so I'm doing this out of the hotel room, and I had to go catch a flight back. I do appreciate you guys all calling in. Olumide, I can't thank you enough for just being in here, short notice once again, just to talk and actually educate us all on investments, opportunities, bond stocks, and all that. I appreciate it. All you folks out here, thank you for always participating and being, should we say, good stewards of this knowledge that we do give out. I'll see you guys next week. Have a good day and bye.
Hi.
I'm leaving now, ma'am.